What's up, everyone? Welcome to Tuck Notes Beginner Stock Talk. My name's Tucker, and in tonight's topic, we will be going over Tesla stock. Coming up, I'm going to cover what drove Tesla stock up today, what drove the overall stock market up today, why. Also, I will get into about what the FOMC meeting was today and what Colin Powell has to say. We'll also watch a short video on the Federal Reserve and hearing from them and what they have to say about interest rates for the future. And can we make it to $1,000 by the end of the week for Tesla? Could it hit the $1,000? Maybe, maybe not. But after that, I'll cover some price predictions for what I think could be happening for the next few days or two. All right, so earlier this morning, Tesla opened up around, I'm going to give you ballpark figures because I don't have it. Oh, actually, I do. This morning, and it was like probably, I don't know, it was like 900, right? And then it kind of sold off a little bit and went down into like below 900, and then it kind of staggered and came back up, kind of went down. And as soon as that press conference came out and positive news came out, it took off, and that was the end of it for the rest of the day. And so that drove Tesla up 4.5% or 4%, a little over 4%, which is a good move to the upside. And the overall stock market also reacted to pretty much every single sector was all green. And so that's kind of a nice relief to hear or feel and see after getting beaten down for so long. Basically, what happened with the Federal Reserve meeting is they are going to increase the interest by 50 base points. I don't know what base points means, but it's a point system that they use for doing this stuff. And we talked about Tesla going up to 950, and here we are talking about it, and it's 950. We talked about it going down to 850 too. So that doesn't mean to say that it is going to just stay up here. It could have some pits or little valleys or cracks. I don't know. But today, basically, so the Fed's talked about no plans for of raising the interest rates for the future. But the next time they talk about this, they will raise the interest rates to 75 base points, which is pretty aggressive. But we will hopefully have a heads up before that happens. And so on another topic, Tesla Shanghai factory is expanding. They're making another factory, probably just the same size. This is going to be the biggest factory Tesla or any factory electric vehicle ever seen on Earth. This is going to make up for what was lost in the COVID shutdown in China. This is going to make up for all the cars that Tesla needs to catch up for to get to that 2 million or $1 million, 2 million cars, vehicles a year produced, I believe, is to be in the like norm or something like that. So, so there was an article that said Tesla plans to turn Shanghai to the world's largest whole export hub with a new factory. So once this fully takes place and they've got this like factory down, they will be producing up to 1 million vehicles a year. Remember, numbers are important. And Elon talked about vehicles. And get this, the mayor of Austin, Texas, even offered, this is on a Twitter story, Elon, you know, you can move basically to Texas and have your company here if you want to move out of San Francisco. And so, based on what I've heard, that's going to happen within probably very soon. I don't know how soon, probably sooner than we can expect. And that's going to be another, could be potential good catalyst for Twitter and Tesla. And so now I want to show you, California, what is this? California to Texas could happen pretty soon once the deal is finalized. That's a big one. All right, so I'm going to show you guys a video of what was mentioned in.
Didn't really yield all that much. That was surprising, but the press conferences where we heard the commentary, the Fed chairman saying that the Federal Reserve will make appropriate monetary policy in this uncertain environment. And we know that the policy statement added China as a risk to the economic outlook. That is because of the COVID-related shutdowns, because of the zero COVID policy in the world's second largest economy. The Fed chairman saying, though, with regards to inflation, we know that inflation is at yearly pacing at levels we haven't seen since the early 1980s. But the Fed chairman said that he does not expect or does not see a wage price spiral, at least for right now. Translation, things likely aren't to get up to speed to the double-digit inflation that we saw in the late 1970s, early 1980s. Of course, history will bear that out in the next couple months or perhaps years. But what was interesting was whether or not the Fed chairman was going to take even more aggressive moves off the table in future meetings. Obviously, that 50 basis point move today was the most aggressive single meeting move that we've seen since May of 2000. The Fed chairman asked if perhaps a 75 basis point move could be on the table. Take a listen to what he said earlier.
75 basis point in an increase is not something the committee is actively considering. What we are doing is we raised 50 basis points today, and we've said that, again, assuming that economic and financial conditions evolve in ways that are consistent with our expectations, there's a broad sense on the committee that additional 50 basis point increases should be on the table for the next couple of meetings. So we're going to make those decisions at the meetings, of course, and we'll be paying close attention to the incoming data.
So the Fed chairman laying out pretty clearly, at least right there, that a 75 basis point move is not going to be on the table, at least in the near term. Instead, it's going to be a 50 basis point, that half point move, that will be on the table in the, quote, next couple of meetings. Keep in mind that would be in June and then in July. Now, obviously, a lot of concerns over what the inflationary picture is going to look like at that point. But again, the Fed chairman saying that the economy looks poised to be able to handle and absorb those interest rate hikes. Now, of course, the next meeting is going to be in another 6 weeks from now, and a lot could change between now and then, guys.
Hey, Brian, what did you make of the tone of the meeting? Because when we started this, or when Jay Powell started this, he started the presser by saying, I want to speak directly to the American people. He's saying that the FOMC is acutely aware that high inflation means hardship. This isn't necessarily the way that these things typically kick off.
No, and that's an important point that you bring up. We hear the Fed chairman usually begin these press conferences by saying the Federal Reserve is paying attention and is, attentive to the American experience in the economy. But he doesn't start off with the literal words, I would like to speak to the American people, and that caught a lot of attention. It underscores just how severe the inflationary picture is in the United States. It's no surprise that Americans are feeling this, especially those on the lower wage, in many cases also minority households. Now, the Fed chairman was saying, look, we're going to do whatever we can to try to use our blunt tools to make sure that we can take inflation back down. And that led to a number of questions in the last hour over how the Fed chairman plans on doing that. And I had the chance to ask the Fed chairman about the Volcker experience, obviously referring to the Paul Volcker-led Fed of the late 1970s, early 1980s when he dramatically raised interest rates to tamp down on runaway inflation. Now, yes, it was successful in taking inflation back down, but also came with a lot of pain because higher borrowing costs really abruptly ended American consumption and business investment, things that rely on borrowing. And when it comes to the lived experiences that were had through that time, it was definitely not fun, although it did ultimately achieve that outcome. But the Fed chairman saying, quote, there may be some pain associated with getting back to 2% inflation, but said ultimately the bigger pain is not dealing with the inflation that we're facing now. So a bit of a tightrope that the Federal Reserve is walking.
Brian, it's exactly what I wanted to ask you about, because Michael Cox, who we're going to get back to in a moment, former chief economist of the Dallas Fed, said there's too much Paul Volcker admiration and not enough emulation. Is that the consensus you're hearing out there, that he's not emulating Volcker enough?
Well, I mean, there could be an argument that he doesn't want to do exactly what Paul Volcker was doing because that triggered a recession. That's why they call it in the economic textbooks a Volcker shock. The idea is that the Federal Reserve feels like in this.
So basically, you heard it from them. That's kind of like what the deal is, breakdown right now. If you like these videos and you find them helpful, go ahead and push the like button. That would be helpful for the channel. And if you find them really helpful, go ahead, it'd be cool if you could subscribe to the channel. It does help out the channel. As I promised, price predictions for this week. So Tesla is $950 right now. And we have, the news with what Powell said, and expect to have a continuation tomorrow and into Friday. And if you push up with what you put in, if you put up the same momentum that you put up with today, we could reach Tesla by $1,000 by Friday, over $1,000, and following that by a breakout. Hopefully, I think into the upside. So stay tuned. Yeah, probably. So stay tuned for next videos. I love you guys. Peace out.